Saurabh Mukherjea as well from Ambit Capital joins in. Saurabh, Manish Sonthalia believes that 7,000 is going to be the floor for the Nifty for the next 3 months if what the exit polls are indicating is right and it's a dominant BJP/NDA win, and there's a Narendra Modi at the Prime Minister's post. What is your own sense? Is that being too over-aggressive, or do you think it's now time to tread with caution?
We've articulated a target of 24,000 for the Sensex. We articulated the target 6 months ago. Sensex seems to be approaching 24,000. I reckon by this time next week we'll probably be going through 24,000. I think once we go through 7,500 odd on the Nifty, around 24,500 on the Sensex. Once we go through those levels, I think that's when I'll start getting cautious. At these junctures, I don't think there's any ground to particularly worry about the overall level of the market. I simply don't think it's worthwhile worrying about the overall level of the market now. It's not as if valuations are particularly challenging. Neither is it the case that the bulk of the FII flows or the domestic flows are behind us. I really don't think the overall debate should be about the level of the market. That does look likely to rise by another 6-7% quite comfortably over the next month or so. The question is, what should one buy in that context of a fairly euphoric market, a fairly optimistic market? What are the places, what are the stocks to buy? I think that is I would say, the more interesting debate, Aisha.
Saurabh, the last leg of the rally has really been banking driven, and they have really been, the leaders of the rally so far. April, when we were chatting, you weren't all that gung-ho about banks. Did you buy into the banking pack eventually?
No, we haven't. I don't think there's anything preordained that says that banks will do well after elections. We've had elections in the past where banks have struggled after we had, I think 10 years ago, exactly 10 years ago, the banks struggled after the elections. And I think that'll be a repeat this time. The economy would be slow to recover. Banks' asset quality drag will take a long time to resolve. I think the banks will find it hard to get deposits. And I would strongly urge investors to think about taking profits in banking in stocks such as Kotak Bank, HDFC Bank. Superb banks they are, but valuations are punchy, and I think banks will struggle. If investors do want to buy banking, I would urge them to have a look at the three large PSUs, BOB, PNB and SBI. But private sector banks, by and large, the top ones especially, look overvalued to us. We've been light on banking for the last year. It's worked out nicely for our clients. There is nothing in the law, there's nothing in stock market investing law which says that banks have to do well after elections, and I'm pretty confident that even after this elections you'll see banks underperform.
The point that you were earlier making about your Sensex year-end target of 24,000, 24,500. Now, that's just about 300 points away from 24,000 right now. But the point is about how the ride for the entire year is going to be. And let's talk about the near term. Do you think the markets are going to pay too much heed to what the exit polls are indicating?
I think you can gradually see that exit poll getting factored in over the course of the day. We saw a little bit of it on Friday and yesterday. By and large, I reckon the market will be roughly couple of percent perhaps up today. That'll be the exit polls taken care of. Most large investors know that exit polls need to be taken with a pinch of salt, especially if it pertains to the BJP seat count. We've seen that systematically in the last 3 elections, 99, 04 and 09, that exit polls do have a tendency to overestimate the BJP seat count. So I think most investors will take a haircut on whatever number the exit polls are giving for the NDA. But as is obvious, even if you take a haircut on the NDA number, it does look like the NDA is likely to form a government, and that I think is being factored into the markets. You'll probably have another couple of percentage of that today. But most investors are waiting for the big news on 16th. I think there's a degree of skepticism about the quality of exit polls in our country, and hence the bulk of the movement I think will still be focused on 16th.
7,100 here. Would you want to reiterate your view? Perhaps it's time to now tread with caution, because come 16th, do you feel like we're going to be in that kind of a case where we are going to see a sell on news kind of scenario, considering the market has already run up so much?
The way we've advised clients is to focus on the fact that typically the early years of an economic recovery in India are good for the market. I think we're just about beginning that recovery. If you look at the underlying data over the last year, it's the very early stages of a feeble recovery. To the extent that that's the main driver of stock markets love discounting economic recoveries. I don't think that process has really genuinely begun properly. So whilst we are hesitant on how much near-term upside there is left in the market, given the run the markets had since August, whilst we are hesitant on near-term upside, I think over the next 1 to 2 years, it does make sense to stay fully invested in Indian equities, and that's a point we've reiterated to clients quite forcefully over the last couple of weeks. If you look back at the last 30-35 years in India, in the 2 years following elections, markets tend to give around 20-25% per annum. I think that's the outlook really for the next couple of years. The market giving roughly 20-25% per annum for the next couple of years. So if one is willing to look over a 1 to 2 year period, this really is the time to stay fully invested in Indian equities. That being said, short-term profit taking, I think will come through over the next couple of weeks as those who entered 5-6 months ago decide to take some profits off the table.
Let's talk about TVS. You mentioned TVS, and that stock has been on a tear, literally on a tear. It is still the number 4 player in the auto market. Margins are the lowest in the industry. Yet sort of TVS in this year has appreciated from levels of about 65 to levels of 120. What's going on with this counter?
I think we initiated around 14-15 months ago with a buy when it was at, I think, around 30 rupees. I remember we put a buy at 30 rupees. I think it's more than tripled since then. I reckon there's another 40-50% upside here quite comfortably. If you look at TVS over the last 14-15 years, they've lost market share relentlessly. They came all the way, I think they were up at 15-16% market share. They fell as low as 5-6%. They pulled back market share over the last year on the back of some good launches of scooters and bikes. I think there's a couple of more launches coming through in the next 6 months which should help them. But even more interestingly, their export revenues have picked up substantially. I think a couple of years ago, exports were something like 10% of revenues. Now it's closer to 20. I think the export story will continue on TVS. But the real game changer here, I reckon, will be the BMW deal. We know that there is some sort of deal that TVS and BMW announced. Neither company has been particularly clear about the details. But our understanding of the situation is this is potentially as game-changing as the Volvo-Eicher deal that was signed 5-6 years ago. Eicher has tripled since then, and I think the TVS-BMW deal could be as transformative for TVS. So, good, relatively well-managed company over the last couple of years, good balance sheet, decent launches of new bikes and scooters, market share gains. There's plenty of headroom for margins and plenty of headrooms for market share. I would continue holding it if I bought it, and if you haven't bought it, I would strongly have a look at this. I think there's 40-50% upside in TVS.
The one pocket which has, really emerged in the last 2-3 trading sessions has been oil and gas. First news on Reliance about the arbitration being slapped, and then of course the diesel price hike as well, which came in overnight. What do you think, to your mind, are the prospects for the oil and gas space?
I think I would be cautious there, really. I mean, it's such a regulation-driven space. You're perpetually waiting for announcements from Delhi about whether it's going to be $8 or not, and then there'll be relentlessly ongoing streams of disputes and arbitration. I really would be cautious about the whole space, including the PSU plays plus RIL. Yes, RIL has done well as a stock over the last few weeks. We don't have a stance on it. We cover the stock, but we don't have a stance on it because we don't have as much visibility on the regulatory drivers here that we would like to. And hence, if you have a strong rally here, I would say it's worth taking profits here. These are large companies. They're intensely driven by regulation. I don't think it's obvious to me that the new government that we'll get, or I don't think it's obvious that a month hence we will have an $8 gas price, and premised on that, I would be very cautious about expecting these stocks to continue rallying.
The economic data continues to be disappointing. Food inflation continues its uptrend. Whichever party forms the government, it's going to have a bumpy ride with a lot on its hand. We've seen that in the IIP data as well last evening. What, according to you, would be the economic reforms that the market would want to see from the NDA government?
I think there's broadly five heads that the government will talk about over the next 90 days. I reckon. I think let's begin with the banking sector. It's obvious that there is a major recapitalization issue, and I think the budget, I reckon, budget will be somewhere in July. In the budget, I think we'll get clarity on the banking recap for the public sector banks. The second issue will be food prices. It's a central driver of high inflation. Food is 50% of the CPI, and there's no sign at all that food prices are coming down. I reckon we'll get fairly swift measures in terms of Food Corporation of India surpluses being used to calm down prices. Perhaps APMC acts at the state level getting amended. Fruit and veg perhaps getting taken out of the APMC Act so that fruit and veg inflation can be brought in under control. Third area will be obviously infrastructure. There's the whole issue around power. Can we step up coal production? I think Coal India will come under a lot of pressure to step up production, and I would say that's probably one of my central buys at the moment. Buy Coal India, because this will be front and center of any government's attempt to unclog the power sector. Similarly in roads, I would expect NHAI to get their act together, and companies like Sadbhav Engineering and Ashoka Buildcon will be front and center. That are these three pieces: banking, food, and infrastructure. I think will be the sort of troika, holy troika of reforms over the next few months. There is other stuff which is legislative reform, which will be much harder to do because the BJP won't control the Rajya Sabha for a couple of years. So things like labour reform, changing the Land Acquisition Act, tax reform, that will take a lot more time, perhaps 1 to 2 years. But the talk about that will start quickly. Action will take a lot longer to push through.
Saurabh, so let me ask you a pointed question. From a market perspective, who are the three people or three politicians whom markets would like to see that they should occupy the top 3 cabinet spots or the cabinet berths?
I think without getting drawn into names, let me put it like this: there is a great deal of expectation on FII's part that India should move towards some degree of clarity and sanity in terms of a clear economic reform program implemented rigorously. From that perspective, a change of guard at the center is what the FIIs are looking for. If we look at the money flows into the country, I don't think significant amounts of FII money have as yet entered India. Roughly $5 billion has entered India YTD. That's pretty par for the course for India. I don't think extraordinary amounts of FII money have as yet flown in. That will only happen if we see, post the election of a new government, if over the next 2 to 3 months we see sanity and clarity on aspects such as the banking sector, such as infrastructure, such as the difficult piece of food reform. And to the extent that Mr. Modi has done this in Gujarat, he knows who the personnel are who've helped him deliver there. And I think that's what the FII will be focusing on. I don't think they'll be that obsessed on what the specific name of the finance minister is or isn't, or what the specific name of the home minister is. Their focus will be, what is the reform agenda, and do you really have the personnel who can drive it through week after week, month after month.